The economy grew at a surprisingly strong rate, at the most rapid expansion in 2 years. Mark, what are some of the factors driving the economy as of now?
Well, first of all, Merry Christmas and good morning. And let's frame it for our viewers. This was a huge number. The street was looking for 3.3%. The economy delivered 4.3%. Doesn't sound like much to the average person, but in Wall Street terms, that is a huge beat, as we like to say. What are the drivers? Well, I'll tell you what they are. President Trump's pro-business policies that are enabling America to get back to work, to get back to manufacturing, to get back to doing more exporting than we do importing. A lot of that tariff revenue is something that other networks don't want to talk about. But at the end of the day, it is a good time to be in business in the United States, and we think that's going to continue in 2026 in a big way.
Yeah, 4.3% certainly exceeded expectations. EJ, what do you think?
Well, we're definitely seeing a lot of strength on the consumer side. That was really the thing that drove this number, the fact that consumer spending grew at such a robust pace. And it's great to see also that the private sector is really the engine behind these numbers. It's not government. And I bring that up because that's exactly the opposite of what we saw under the Biden administration, where you had a disproportionate amount of government purchases driving these GDP numbers. And so it wasn't private investment growing the economy. It wasn't a strong consumer. Instead, it was just the fact that the government was going into debt, spending a ton of money to really boost these GDP numbers. But if we look at how much, what do we have for federal government expenditures this year, for example, it's actually negative at an annualized rate of -2%. Again, stark contrast to what we had the prior 4 years. We are seeing real private sector growth here. And I think next year, we're going to see investment in particular really take off because of the provisions in the One Big Beautiful Bill. So very, very bullish for long-term economic growth.
And President Trump taking to Truth Social with this, quote, "The tariffs are responsible for the great USA economic numbers just announced, and they will only get better. Also, no inflation, great national security." And then, of course, he added, "Pray for the U.S. Supreme Court." We won't get into that, Mark, but do you agree with the president? Can tariffs be responsible for this?
Yeah, I mean, listen, so I do, of course, agree with the president. The tariff policies are working. They're resulting in over $200 billion in revenue. And as your other guest just pointed out, we've actually had a budget surplus in this country, something that is almost completely unheard of, certainly in recent memory. And that growth coming from the private sector, that is very, very important, because that is really the only true growth, not artificial government spending. But I don't think the president gives himself enough credit for policies beyond tariffs. He's lowered regulatory red tape that's made it easier for businesses to be profitable and to make money. And the other non-tariff trade policies, evening the playing field with countries like China, are making a big difference.
So meanwhile, I do want to get to this as well. The president revealing his new rules for the next pick as the Fed chair. Yeah, I'm sure you guys have heard about this. Trump saying he's going to ensure political motives are eradicated to make sure the U.S. be rewarded for its success. This all as consumer confidence has been rocked by high prices as well. EJ, do you have a prediction for his pick? What do you think? And what do you think about the new rules?
Well, look, I think this whole idea of Fed independence, frankly, is a bit overblown. Don't we want people to be accountable to the voters, people who are in positions of power? I think it makes a lot of sense that you have people in the administration be able to weigh in on monetary policy. The most important price in the entire economy is the price of money, and it's currently being set by an attorney, Powell, and his fellows, who, again, they're not even accountable to the voters, at least not directly. If we go back to how the Fed was originally set up, you actually had the Secretary of the Treasury as a key member of the Fed board, who were setting those interest rates and were conducting the other aspects of monetary policy. So I think it's a really good idea to, again, have accountability here. And we shouldn't avoid that all in this name of independence, because it's a word that sounds great, but it doesn't really have the meaning I think people think it does. in this particular instance. So again, I think accountability is a great thing, especially when it comes to people being responsible to the voters.
Yeah, Mark, just about 30 seconds. Just want to get your take on that.
Well, first of all, to your question, it's Hassett. I've said it before on this show. I'll say it again. My sources in D say that he is all but a lock. And I think EJ's got a point there. But I really like the president's new rules for the Fed chair. The president pointing out this bad news, good news dichotomy being something that Americans and he really struggle with. We get good employment numbers. It's bad news for the market because it means that J-Powell's not going to make a move on cutting interest rates. It doesn't make sense. We got to get back to common sense economics.
Great discussion this morning with both of you. Mark, EJ, Merry Christmas. Thank you.